So the market was extremely volatile today, but using the 30-minute candlestick trading strategy, I decided to wait all the way up until the last 30-minute candlestick because of how the price action was moving. It was extremely choppy and it was all over the place with very big sharp moves to the upside and to the downside. With that being said, due to the price action of not my liking, along with lack of confirmations on the 30-minute chart, I decided to wait to trade all the way up until power hour. And then using the video analysis that I posted last night, I made it very, very clear in terms of the daily chart pattern. If the SPY tops at that 570 level later into the day, it's going to try to spike into the close 2 points from the lows using that daily chart pattern. So using that foundation, I was able to go 2 for 2 on the day, trading the last 30 minutes, buying SPY call options, scalping for 50 to 100% profit returns very, very quickly at the exact lows and selling towards the peak. I'm going to walk you through in terms of how I was able to do that. But first things first, let's get into the levels. So in terms of a break of trend with the daily pattern, there is a slight break of trend. The SPY ended up closing green on the day, which is why I decided not to swing trade the puts. For me to swing trade the puts in terms of the short-term potential swing trade, I needed to see a red bearish daily candlestick. I was getting ready because the market was attempting to close bearish, but it ended up spiking a little bit higher than I had anticipated, right? So with that being said, I'm going to break down this daily chart analysis. As you can see right here in terms of the pattern, we have the red daily candlestick, the red daily candlestick, the green candlestick in the middle, the red daily candlestick, then you have this green candlestick, and then you have this red trend reversal candlestick, right? So in terms of this comparison, we're comparing these daily candlesticks to these daily candlesticks. Like I showed you in last night's video, you have this red daily candlestick, this red daily candlestick, the green candlestick in the middle, and then this red daily candlestick, right? So the red, green, red, you can even say double red, red, green, red. And with that being said, you have this green daily candlestick. So in terms of the video last night, this is why I said, if you look at the overall pattern, what can potentially happen is if you're seeing bearish 30-minute confirmations at the previous day highs towards this 570 resistance, that could potentially be the high of day on the SPY. And if we're not getting bearish confirmations and SPY is pushing above the previous day highs, then that means there's a break of trend and it can potentially go to 572.50 to 574. So there was no break of trend. Now, in terms of the price action and how the 30-minute candlesticks ended up closing, I decided to not do put options because the market was all over the place. It was extremely choppy, but the levels in terms of that daily chart analysis were spot on for key reversals. And what I decided to do was buy call options later into the day when the chart was fully developed. So in terms of that comparison, the SPY was topping at the previous day highs, which means that history is maintaining to repeat itself. And then you could see on this overall day, the SPY ended up closing 2 points above the day's lows. So if I'm seeing the SPY sitting at the previous day lows right into the market close, it's very, very likely that that history is going to repeat itself because it was already repeated in terms of it topping, that it's going to start to spike and close in the overall middle like it did on this day, And the main difference was it ended up closing green. But if you look at the candlesticks, very, very similar in terms of how they closed right here on September 5th compared to, October 3rd, right? So with that being said, based off the daily chart pattern, Friday is setting up for a fairly volatile day. Now, in terms of the major crash, one of the problems that I'm seeing on the daily chart is the way that this candlestick closed. This is a trend reversal candlestick, right? So if the market is opening up flat, if we are not having a big gap down, is likely going to be a very similar range day compared to how we were trading the last 2 days. And if it's just maintaining flat within that range, it could potentially be the day where the SPY ends up closing strong and starts breaking above 570. In terms of for a true bearish day heading into tomorrow, the main confirmation would be a big gap down. The main confirmation for this strong bearish day would be a massive gap down below 567.82. Ideally, it's going to need to gap down under 566. And for the bears to be truly in control, we need to go under the 565 gap breakdown level. If we go under 565 and turn that into resistance with strong bearish, 30-minute candlestick confirmations, the SPY is going to be on track to go to the next support level in the pre-market, which is what I showed you in last night's video, the 563. And then the gap that's waiting to fill below at the reversal. So the main thing that I'm seeing is, man, for a super bearish day for this history to repeat itself, right, it's lacking confirmation. That's why I didn't swing trade the puts, because this is closing green and bullish. And based off of this daily pattern, I went back throughout the chart history. What it's telling me is if the SPY is opening up flat, if we are not having a massive gap down, is very unlikely that we're going to have a major crash heading into tomorrow. But in order for it to happen regardless, it needs to go under 565 and it needs to turn that into resistance, right? If you're seeing strong bounces towards 566, 565 all throughout the day, very unlikely that it's going to crash to 563 to 561. What makes the outcome more likely is if the SPY has a massive gap down. That's my overall analysis on it, right? So if we're not having that massive gap down, it's likely just going to chop throughout the previous 2 days channels, and it could potentially have a strong breakout above 570 later into the close, right? If we are going under 565, bears are in complete full control. If we are gapping down under 566, the bears can potentially be in full control, right? And in terms of bears going in full control, if we go under 565, 563 to 561.30 are going to be the dip levels, right? So the main play in terms of call options is to focus on those oversold levels, right? So if we're opening up flat, if we're not having a massive gap down, I'm going to be targeting call options towards the previous 2-day lows. I'm going to be interested in buying at 565 and 566, right? And then in terms of the next level, if we are maintaining above 565 to 566, the make or break level in the middle is going to be the previous closing price. 567.82, we can round it to 568. If 568 reacts as a resistance, we push back down towards the 565 to 565.50. If it breaks out, reacts to support, we push up to 570. Later on throughout the day, if we are maintaining this channel and SPY is consistently bouncing and you're seeing higher support forming, it could be an opportunity for a break above 570. If we break above 570, the next levels we're going to is going to be 571.50 and 572.50. Next levels above that is going to be 573.50 and 574, right? I'm telling you, if the SPY is maintaining overall bullish, it's going to try to close green in a sense. And it's really just going to try to maintain for a key oversold dip buying opportunity. So it could be a very similar outcome throughout the past 2 days with a potentially stronger close if we are holding support and we are not having a massive gap down. For the bears to take full control and for me to be very interested in going short, we need a big gap down. If not, we need a crack under 565 and we need to be maintaining under 565. You got to be very careful with puts if we're not gapping down. You can keep an eye on the overbought levels, but if we're not gapping down and we're seeing, throughout the chart development where the SPY is just bouncing at oversold levels, my main interest heading into tomorrow will be buying call options at the oversold levels. The 3 levels in terms of the bullish thesis is the 565, the 566, and then the highest level is going to be the previous closing price, 567.82. If we are maintaining that zone, we can close 570, a potential break above 570 to 571.30 to 572.50. That's the overall analysis, man. So based off of what I'm seeing with this daily chart pattern, I'm mainly going to be focused on call options. Just understand earlier and throughout the middle of the day, this can potentially keep topping at 570. Based off of what I'm seeing on the daily chart pattern, it is not wise to be buying calls at resistance levels. Go with the oversold dips. In terms of later into the day, that's where it can potentially break out if we are maintaining above the previous closing price. If we're maintaining above the previous closing price into the close, we can potentially break above 570. But in terms of the levels of interest, the previous closing price is the highest level for calls, and that should mainly be used later on throughout the day. In terms of earlier in today, I'm going to be focused on oversold dips at 566 and 565. Based off of what I'm seeing, I'm truly lacking interest in terms of buying put options heading into tomorrow. Like I said earlier in the middle of the day, if we're seeing bearish 30-minute confirmations at 570, 571.30, you can try put options, and then 562.50 is going to be a great level above that if it happens earlier in the day. If we are having a big gap down, and we go under 565, then it's likely going to flush to 563, 561, lower oversold levels for calls, right? So, like I said, man, unless we're having a big gap down, unless we're having a strong crack under 565, it's going to be territory to buy call options at those 3 low levels, 565, 566, and 560, 80, right? And I'm telling you, you need to be aware in terms of later on throughout the day for a potential breakout if we've been holding above those main levels and we are holding above the previous closing price. The SPY is on a time crunch right now. It's trending overall sideways. If it can turn this previous closing price, this 569 into support, and we could finally break above 570, that's when it's finally going to have that sharp move to the upside into the 571.50 to 573 overall range. That's my overall thoughts based off of how the market has been reacting throughout these past 5 days, based off the daily chart. That's how I came up with this overall game plan. Now, in terms of the trades, man, the biggest edge to waiting to trade later on throughout the day with the strategy is, you got to understand, in terms of my main strategy with the candlesticks, I prefer to wait for 30-minute candlesticks to close, right? If I trade directly at market open, there is no closing 30-minute candlesticks until 10 a.m. unless you're going with the extended hours trading session, right? So it's very easy to trade if you make it easy and simple to trade once you get this down, right? So you kind of want to simplify this and dumb it down as much as you possibly can, or you can truly master this art of simplicity. It starts to become a form of where it's just like beginner trading in a sense. It's so simple, but you got to have the right deck. You got to be patient. You got to be disciplined, man. So I like to trade later on throughout power hour because I like to wait for the chart to develop. I like to wait for the 30-minute candlesticks to close, right? Look at this. This is like scribble fucking scrabble. If I'm trading based off the 30-minute fucking chart, do you think I'm going to be desired to fucking trade this, right? This is fucking, it's like someone just scribbled all over the fucking chart. What is this? I'm not going to be trading this. Even though it's been topping out at the best fucking level, like I told you, the lower level for puts at 570, that's great. But there was clear lacks of overall confirmations with the patterns that I was seeing on the 30-minute chart. And it just kept on trading sideways within this overall range, extremely volatile. So I stayed away, man. I'm telling you, the morning can be extremely tough if you're using technical strategies. In a sense, it's different if you're trading just purely based off of intuition, and that works for some people, right? I like to have everything in terms of within my favor. Now, I like to wait throughout the power hour trading session because the chart is already developed. The candlesticks are already developed. The bull and bear traps are already set. And in terms of capturing a trend and capturing a history, it tends to work best if you wait for it to develop, right? So for example, in terms of these trades on call options, I was looking at the daily chart and I was saying, you know, if you watch the video, I mentioned this pattern where if the SPY tops above the previous day highs, we were comparing this pattern, or if it tops above the previous day highs and then it comes crashing back down, it's going to try to spike 2 points below the low of day. So then you're probably wondering, where's the low of day? Well, in terms of last time, it went under the previous day lows. Today, there was a slight difference. History is going to repeat itself in similar cycles. So in terms of today, it was kind of clear that the low of day, if this pattern repeats itself, was going to be towards this 566 because there was no time left on the fucking shot clock. And the SPY was just bottoming at 566 all fucking day towards this pre-market low. That's why. So history is going to repeat itself in similar cycles. So I'm thinking to myself, all we're doing is holding support. There's all of these fucking wicks waiting to test. I tell you all the time, if there's a bullish foundation, bullish confirmations, the SPY is going to try to spike back up to test the high of these 30-minute wicks at 567.30, the high of these five wicks at 569. And then in terms of measuring the move, I went back throughout the daily pattern I was seeing, and it said it can potentially spike 2 points from the low of day. So in terms of the low of day, it was towards this 560, 550. So I added 2 points to that, and I came up with a 567 to 567.50 overall profit target. The plan was to buy call options into the power hour trading session and to sell those 567 calls in the money. And in terms of another confirmation, I talk about this all the time, a 3 slanted red trend reversal pattern. If there's a bullish foundation, so in terms of my bullish foundation, pre-market lows in the daily chart pattern, the daily chart pattern confirmed that, okay, the SPY topped at the previous day highs, and it sold off back towards the lows. And in terms of how it closed, if that pattern continues to repeat itself, it's going to close in the middle and have a 2-point spike from the lows. And I already explained to you on how it was likely the lows, right? Because we're just sitting here with no time left on the fucking shot clock, and we have a lot of strong support at this 565 level where we've been bouncing throughout the whole fucking week, right? And I told you throughout previous videos, it's likely going to bounce first at that level. It's a key gap breakdown level, right? So I'm looking at this overall trend, man. When the SPY slants for 90 minutes, right here, this is what it looks like. A 3 trend reversal candlestick slant. I talk about this all the time. It's got to be at a bullish foundation. The bullish foundation came from the pre-market support. The bullish foundation came from the daily pattern that I brought awareness to in last night's video. So I'm saying, okay, there's 30 minutes left on the fucking clock, and we're bottoming towards this overall zone. It's likely going to spike 2 points from the low of day measured move. We're going to close strong. And also, there's been a short-term trend where many times recently, the last 30 minutes, the SPY has closed strong. And like I said, if you're seeing a 3 slanted red trend reversal pattern like this, right? And look at this. Oh my gosh, I mentioned this all the fucking time, man. Go back throughout the videos, man. Go back throughout the videos. A red bearish candlestick to the downside, a red bearish candlestick to the upside. That's a trend reversal fucking pattern. You can stack that with the 90-minute slanted red trend. You can stack that with the daily fucking chart. You can stack that with the daily pattern. You can stack that with the pre-market lows, man. But I talk about this all the time. Go back and look throughout the videos. I speak about this all the fucking time. This red bearish candlestick to the downside, red bearish candlestick to the upside. And then I tell you the next 30 minutes is going to be bullish. Go find it. It's within the videos, man. I'm telling you. So with that being said, those were all the reasons. Like I said, I stack everything it is I know within my favor. And also with the intuition. The intuition came to me. It was speaking to me during this play. So that's why I was expecting the market to close strong above 567 to 567.50. You can see right here in terms of the breakdown and retest strategy, the SPY had this 568.30 support level on the 30-minute chart. Once it cracked that support, it had a breakdown and did not retest on the overall 30-minute chart. So it's likely going to try to spike back to test that strategy if you have the proper foundation, right? People have strategies like breakout and retest and breakdown and retest, but they don't have the proper foundation and the proper deck to stack within their fucking favor. If everybody knows about the breakout and retest and the breakdown and retest, you have to find ways along with your intuition to stack within your favor, because the strategies work, but you have to find an edge in certain times where you trade best at to make them work. And trading in the last 30 minutes is really going to help you in terms of your trading, man. I'm telling you, it allows you to be disciplined. It allows you to be patient. Missing out on all of the price action and waiting for the chart to develop, it eliminates that fear of missing out. And for the vast majority of the time, there's typically going to be 1 to 2 trades towards the end of the day. And it's the best time to trade zero-date options. Zero-date options are getting ready to expire worthless. We buy them further out of the money. We sell them in the money right before they're about to go worthless. And it gives us the biggest percentage gains with the cheapest contracts, lowest barrier risk, lowest entry in a sense, right? So in terms of these trades, man, this was the first trade. I'm telling you, this was a truly special day within the overall community, man. For those of you who participated, you're well aware, man. This was a fucking crazy day, man. I've been on absolute fire throughout the past 2 weeks. At 3:14 p.m., I ended up buying the 567 calls at 35 cents, right? And then in terms of time frames, guys, like I use the 30-minute time frame because that's what works best for me. And like I said, using the 30-minute time frame, you're going to be able to hold for 30 minutes. You can use the 1-minute time frame and the 5-minute time frame, but it's less of like a holding type of trade, right? You can hold for longer periods if you're seeing like 1-minute or 5-minute patterns throughout the charter history. That works. It just doesn't come across as a lot. But I'm telling you, the 30-minute chart simplifies a lot of things. But if I'm saying 570 puts, you can use the 1-minute chart and 5-minute chart and make smaller scalps. But sometimes you're going to see patterns on the 1-minute and 5-minute that can lead to overall bigger directions. And if you know how to trade the 1-minute and 5-minute, you know how to maximize for bigger gains and hold with that. But like I said, in terms of personal preference, my main foundation is that 30-minute chart in that daily chart. And then sometimes I'll use the weekly chart as well. I like to stack everything within my favor. And what I found that works best for me, man, I'm telling you, the daily chart, the weekly chart, and then you dissect that. You go with the 30-minute chart, and then you could break it down 1-minute chart and 5-minute chart. In terms of how I break down a 30-minute chart when I'm trading the 30-minute chart, I use the 30-minute chart, but I also look at the 1-minute and the 5-minute chart. And then sometimes there is certain patterns on the 1-minute and 5-minute that if you're looking at the overall 10-day 5-minute chart or 10-day 1-minute chart, there could be a pattern that the 30-minute chart isn't showing you at a level, and you can use that pattern. It could be for a bigger move. So that's more of a rare situation. I don't talk about that much because I've just been really so laser focused on this 30-minute chart because I just find it to be so simple. But 1-minute and 5-minute chart patterns can help dictate the overall longer period of direction as well. But like I said, man, the 30-minute chart, it does not get more simpler than this, right? So in terms of this trade, I bought these 567 calls at 35 cents a contract, and I ended up exiting these calls at 51 cents a contract, right? So I sold at 51 cents a contract, and then I ended up making another trade using the strategy. I ended up getting in on the same strike when it dropped back down at the exact lows, 29 cents a contract, and then I ended up selling at the speed of fucking light for 46 cents a contract, right? All those trades were broken down real time, and I also gave my real-time market analysis, and I prepared them in advance, man. In terms of power hour trading, it happens very, very quick, so it's best to prepare people in advance for levels where I'm planning to get in at. You'll know exactly what I'm going to do before I even fucking do it at times with the proper plans laid out, right? Sometimes it's just purely intuition where it's not much of a plan, it's more of intuition. But this overall trade had all the fucking stacks in your favor. You should have seen this if you study my stuff, right? So with that being said, man, in terms of the overall contracts, like I said, so on these SPY calls, I ended up getting in literally right here. This is where I got in the trade and learned it real time towards the exact lows. This was the first trade, and I ended up selling right here towards the short-term peak. And then when the calls went out of the money, the plan was to get back in, and I got back in at the exact lows. So I basically bought call options at the exact fucking lows, and I sold them at the same towards resistance level. You know, if I left some runners, could have sold bigger. They went to 120 a fucking contract, right? So with that being said, man, like I said, I absolutely crushed it using the 30-minute chart, breaking things down with the 1-minute chart. I was expecting an overall strong close. I did underestimate it. My profit target was 567.50. We did end up going to 568, retesting that overall breakdown in retest level, man. But like I said, for those of you who are within the chat, man, I'm telling you, man, my intuition was speaking to me on this overall play along with all the stacks. And then I was giving out the plan. I put all my brain power to it. I put all my heart, my soul into everything on this trade. And it worked out so fucking phenomenally, man. Like I said, phenomenally. This was just something you had to be there to witness, man. Because I'm telling you, the preparation behind all this and the plan and the real-time analysis, like this was fucking special, man. This was an amazing trading opportunities throughout the day that you could have taken an advantage on, man. So like I said, there's big edges to just waiting throughout the day. You're going to have the chart develop. The bull and bear traps are going to already be set. Trading the last 30 minutes tends to offer the highest risk to reward ratios. The contracts are extremely cheap. They're getting ready to expire worthless. You pick the right strikes, you sell in the money, you're making the biggest percentage gains with the cheapest, lowest risk throughout the day, right? So with that being said, man, if you're serious about getting involved within our community, it's the first link down below within the description. Right? If you want to trade alongside with us, we also have 2 multimillionaires within this community who actively alert their trades. And you also get access to a real-time zero-date options trade alert system. Just in terms of the background to the zero-date options trade alert system, we are known for buying cheap, low-risk, far out of the money option contracts. We're known for selling them deep in the money for the biggest percentage gains. At times, we are going 3 to 5 strikes out, right? And we do not use stop losses. At times, we will sell for moves, for losses if it makes sense, but we do not use stop losses inside a team roar. You put in your max risk, you can put in your max risk per trade into the contracts. If they expire worthless, you're going to lose your max risk. That's the beauty of trading cheap, low risk, far out of the money option contracts. You know exactly how much you're going to lose, and they allow you to risk exactly what you want to lose. And these trades have the highest risk to rewards within the market. Every single month, we typically have 1,000% gainers where we sell for 1,000%. And if you leave runners on some of these plays, on the morning plays and the power hour trading plays, if you leave runners, which is like 20-25% of your position size, you're going to be experiencing 500% to 1,000% gains as well, right? So with that being said, we don't use stop losses. We sell for losses sometimes, but then vast majority of the time, we'll just let them expire worthless. When we're down 50% on a trade, 70% of the time, the contracts, if you hold them, they tend to come back to life, which is another reason why we don't use stop losses along with the risk management. We don't need to use stop losses. We're putting in our max risk per trade at most so we can afford for the contracts to expire worthless. They're very cheap. They're very low risk. You know, we're typically getting in at prices at like $40 a contract, $50 a contract, 30, 40, 50 cents, right? So with that being said, we also set profit stops. When we are up a little bit, 5, 10, 15, 20%, very small gains inside of this group. When we're up a little bit, we set profit stops. When you are green on a trade and you set a profit stop, it ensures that you're not going to go red on the trade. You get stopped out for profits. As the trade is working within our favor and we're up like 5, 10, 15, 20%, we add to the position. We add to the position, we set to the profit stop, we set the profit stop to make sure that we don't go green to red on the trade, and we add to the overall position to increase our overall winnings. Because like I said, if we're getting a winning confirmation on an overall trade and we're only up a little bit, it kind of makes sense to add a little bit more and then sell for the bigger wins. And the way we protect that bigger win is to sell into the move at key levels of interest, right? Using the chart, using your intuition, and also moving your profit stop up. Moving your profit stop up is going to ensure that if the market has a big move against your trade, you're going to get stopped out, keeping the bulk of your profits. So if you are serious about trading alongside with us, I would highly encourage you, if you're ready to join, it's the first link down below within the description. You can gain access to our secure private organization, our private trading community, multimillionaires trade alongside in there, also the zero-date options trading alert system, right? I'm telling you, man, there's nothing like this group. So with that being said, it's the first link down below within the description. Tomorrow's going to be a phenomenal trading day, man. I'm telling you, the days just keep on getting better later into the week, man, because the chart just keeps on fucking developing. The more the chart is developed, the easier it is to trade. I'm telling you, I'm trying to dumb this down where it's just so simple and easy to make money within the market. And in terms of doing this with this strategy, there's typically like 2 trades a day. You just have to be patient. You have to be disciplined. You have to know what to look for. You have to have your third eye open. You have to have the awareness, and you have to have that execution, man. And you need intuition in your favor as well. You got to have that intuition. Like I said, man, I know traders, they literally just use intuition. They can't they can't teach the strategy or explain it. They use their heart. They trade with their heart. The intuition speaks to them and they go with it, and it works, man. I'm telling you, there's nothing like that, man. That's why when you're in a trade and as you're in that trade, that intuition is with you, man, those tend to be the best ones, man, when you're actually in the trade risking money and your intuition is still there with you. And that was that situation today, and that's how I was able to do so well, along with everything that I'm stacking in my favor, man. Like I said, I want to use everything to my edge, but I also want to know what works best. You know, I don't want to stack too fucking much where it's just like overloading and not necessarily. That's why I prefer to not use all these indicators, right? I know what works best for me. I dissect the chart. And like I said, man, some people just trade purely based off of intuition, man. It's very important to have strong intuition as a trader, man. I'm telling you, it works. You gotta unlock that intuition, man. So with that being said, you know, it's the first link down below in the description if you want to join our secure private organization. With that being said, I'll be in the chat tomorrow. Also, the beauty of Fridays is we're going to have stocks on our radar, and you guys can post your stocks. Any stocks you guys are interested in watching on Friday, post them on Thursday and Friday, because that's when the zero dates are going to be into play on these stocks, man. When they're getting ready to expire worthless on the overall zero dates, typically on Thursdays, we'll be really focused on stocks. And then Fridays is going to be the best trade to overall trade them, because we're going to see a lot of stocks that are offering the zero date options trade opportunities besides just SPY. And those stocks can offer massive gains, 300, 500, 1,000% returns, right? And then you can use SPY within your favor. I'm telling you, if you follow the top 10 holdings in SPY, if you follow them all, you're going to see one's going to make a move, and then later on throughout the day, you'll see the same pattern. It's like a delayed reaction where you can take advantage of that pattern on a different ticker later on throughout the day. So post your stocks within the overall chat tomorrow. Anything on your radar, I'll be taking a look at. And I'm telling you, man, I love Fridays because it tends to be my best trading days, but also simply because of the stock plays, man. It's very exciting when, you know, you're scanning for stocks and you're seeing these new runners pop up and the option chain is good and everything's good. Also with the stocks you've been waiting for in terms of the contracts to become in zero dates, it's very exciting when the proper chart setup is there, along with the rarity of just trading something different. But like I said, it truly is best to just trade and master one ticker. That's going to give you an edge over that, right? But Fridays are exciting because these contracts could be like 20, 30 cents and they can go to 100, 200 cents, right? It's just a very lucrative day to take advantage of some smaller trades, right? And it tends to be a day where I like to make a lot more trades in that situation as well. It really allows me to test my abilities to the fullest length with this zero date options trading strategy. But like I said, the best thing you can really do is just trade the same overall tickers and master them throughout the years. It's going to give you an edge throughout everyone else within the overall market, right? So with that being said, I'm going to be signing off. I will see you guys within the chat tomorrow.